Hi, Mike Flores here, co-founder of Trade Prosper, and welcome to Section 7, How to Manage Your Stops and Putting It All Together. Before we move on, I want to congratulate you for getting this far in the course. If you stuck with it and you're here, that means you're doing really well, and I want to commend you and encourage you to keep going. There's only a little more to go, and I promise you, once you see the big picture and everything put all together, you're really going to be excited and ready to move forward. All right, let's move on. In this section, we're going to talk about making sure it breaks, the cushion. Now, it, in this case, is price. So we talked about the channel breakout, the 55-day breakout, and we talked about what happens when we have the sideways setup and the ADX with the 55-day high or low. Now, when it breaks, when the 55-day high or low breaks with price, we said we were going to get long on a 55-day high or short on a 55-day low. So now here comes the cushion. Now, what is the cushion? The easiest way to explain it is that the cushion is going to ensure that we have a legit breakout, not just touch the 55-day high or 55-day low. We will be using it for every order that we place, and the cushion is basically the difference between the bid-ask spread. So basically, if you're going to buy on a break of a 55-day high, you take the 55-day high price and then you add the cushion to it. If you're going to sell on a break of the 55-day low, you take the 55-day low price and subtract the cushion from it. Let's look at an example here. So what I mean by the bid-ask spread is this. Every market has a bid and an ask spread. If you want to know more about what the bid and the ask means, check out the free modules on our website, www.tradeprosper.com, under the free content section, and we have a video there about bid and ask. Anyway, for here, I have my first example of the euro versus the dollar currency pair. So the bid in euro here is 1.2450, and the ask is 1.2453. Now I said the cushion was the difference between the two, or the spread. So the difference between this bid and this ask is 0.003, or 3 pips. In the next example, we have gold. The bid is 1175.5, and the ask is 1176.00. The difference between the two, 0.5. So the cushion would be 0.5. Bank of America, which is a stock, let's say the bid is 17.20 and the offer is 17.25. The cushion would be 0.05 or 5 cents. Now, basically, like I said, what you want to realize is that the cushion is going to be the difference between the bid and ask of whatever you're trading. But now here goes a way to make it even simpler. I like to standardize things as much as possible. So for foreign exchange or FX, just make it very simple and make the cushion always 3 pips. For stocks that are less than $100 per share, make the cushion 10 cents. And for stocks that cost more than $100 per share, make the cushion 50 cents. Now for futures or CFDs, you have to continue to use the spread because for every future and CFD, you would have a different buffer. So if you want an example of what cushion you should use, then look in the supplemental section of this course and you'll see that I put an example there of what your cushions should be for futures, Forex, and stocks. Okay, that's all for this video. This is a quick one, but we will be using the cushion for every order from now on, and you will now hear me using it in all of our examples. Let's move on to the next video. All right, see you guys soon. Bye.